All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about RIOT Platforms, stock ticker RIOT. RIOT did two things. They not only put out their October monthly operational report, but they released their third quarter 10Q. So we have their financial statements, we have their monthly update. There is a massive amount of information to go to on this one. So this might be a little bit longer video than usual. We will have chapters below and you can jump around if you want to. I've already gotten a massive amount of questions on this one in the private Discord. So I want to go through this thoroughly. There's an awful lot going on. So if you're new to the channel, we talk about Bitcoin and the Bitcoin miners all the time. We'd appreciate it if you help the channel and smash the like button. We're setting a like goal of 500 likes for this video. This one took me a long time, so hopefully you guys enjoy this one. Please remember to smash the like button, and if you enjoy this content, please remember to subscribe to the channel. Still about half of you are not yet subscribed to the channel. So with that, let's get into RIOT. There's a lot to go through. Yesterday, the Bitcoin miners were down quite a bit. Bitcoin was actually rather sideways. The market was a little bit down. The Bitcoin miners got beat up pretty badly yesterday. None worse than RIOT. RIOT was down over 7%. You can see it closed yesterday at $10.28, down 7.14%. That still left it over a $2 billion market cap. Okay, before I get to the monthly operational update, I want to go back in time just a little bit. At the beginning of this year, I did a video basically outlining my top 8 Bitcoin miners, my highest level of conviction. I want to remind everybody, this is not financial advice. These are my opinions. So when I did that at the beginning of the year, RIOT was my #1 highest conviction Bitcoin miner. Based on what has happened and what we're going to go through, this is no longer my #1 conviction play. Now, it's not like it's fallen off the list. This is still personally one of my largest positions of all the Bitcoin miners, but I do have a little bit less conviction and I have a few more questions. So I'm going to go through all the questions that I have, and I know I'm not alone because, again, I've gotten an awful lot of members and subscribers already asking me, what does this mean? What does that mean? What's going on with RIOT? So I'm going to try to get to those questions in this video. So I'm just going to show you, in January of 2023, RIOT mined 740 Bitcoin. That was more than any other Bitcoin miner. So I just want to bear this in mind because later when we see what they're doing now, you're going to see why I do now have some questions. So that takes us right to this month's operational report. You'll see way back in January, they were mining 740 Bitcoin. Well, it's now October. If we look at this announcement, RIOT announces October 2023 production and operations update. The first line, RIOT produces 458 Bitcoin. So that's significantly less than they were producing in January of 2023. A lot of the other Bitcoin miners have gone sideways. Some of them have continued to increase the number of Bitcoin that they mine. RIOT has decreased the number that they've mined. There has been a reason for that in some of these months, and we're going to get into that. It has to do with energy credits. So in August of 2023, they made over $30 million of energy credits. Last month in September, they made over $13 million. But you're going to see this month in October, they only made $2.8 million. So you can see they mined 458 Bitcoin. They sold 440 Bitcoin. So they did not hodl very many in the month of October. However, they do have a decent sized hodl position. As of October 31st, they have 7,345 Bitcoin on their balance sheet. This is one of the reasons that I like RIOT, and this is one of the reasons they were my highest conviction play. We're going to talk about their balance sheet. Their strength of balance sheet is outstanding. We'll get to that later. Okay, deployed hash rate 11.7 exahash. They bought machines and infrastructure to get to 12.5 exahash well over a year ago. They've had a few things happen along the way. They do also have some massive growth plans, so we will also talk about that later in this video. Okay, so those are the highlights from the month of October. Now I want to go to their investor presentation. They updated their investor presentation to reflect the financial statements that they just issued. So I want to go through a few pages in there and talk about some of the important issues that are going on. Okay, so Q3 2023 quarterly update, November 7th, 2023. So this just came out. This is fresh, hot off the press. Okay, so let's look at the first slide. Okay, significant scale of operations, $52 million of revenue. We're going to talk about revenue. I'm going to break this down. They have 3 different segments. They're not just a Bitcoin miner. So as of September 30th, 98,694 miners were deployed, 10.9 exahash. We know that's now 11.7 exahash 1 month later. And in the quarter, they mined 1,106 Bitcoin. Year-to-date direct cost to produce 1 Bitcoin, $5,537 per Bitcoin. I am going to talk a lot about this. I'm going to dissect this number because I will tell you, in my opinion, I think there's some other ways that are important to look at this. I'm not saying that this is wrong, but I am saying this is a hybrid combination of several numbers, and I think pulling them apart and explaining exactly how they get to this number is important because I do believe very strongly, again, I don't know the future. This is not financial advice. But if history holds true, their cost per coin for the next 6 months is going to be significantly higher than this. And it's not because of the halving. This number includes these massive one-off energy credits that are not coming over the next 6 months. So while this number is not incorrect, I do want to clarify it a little bit because there's a pretty dramatic difference between what they're reporting and some different ways that you can look at this. So we're going to get into that later as well. Year-to-date Bitcoin mining gross margin 79%. I'm going to talk about that as well because that is also skewed by these energy credits. So number 2 requires further conversation, in my opinion. Number 3, strong financial and liquidity position. This does not require further conversation. In my opinion, there's no disputing this. These guys are the kings. Their balance sheet is the strongest out of any Bitcoin miner. They had the better part of $500 million in liquidity at June 30th. So this is a very, very strong company. And there's another gigantically important piece to this puzzle, which in my opinion makes them the strongest Bitcoin miner. With almost $500 million in liquidity, they also have, you'll see the last thing they say here, long-term outstanding debt, 0. So against this $500 million, there is no debt at all. So when they say strong financial and liquidity position, they put this at number 3. I would put this at number 1. This is the reason that, in my opinion, this is the safest investment among the Bitcoin miners. I'm not saying it's going to be the best performing. We don't know. Only the future knows. Obviously, everybody's going to make up their own mind. I'm not telling you to buy Riot. I can't tell you which Bitcoin miner to invest in. But what I'm saying is, with $500 million in liquidity and no debt, they are set to weather basically any storm that occurs from a Bitcoin price standpoint as we approach the halving, as we go through the halving. Even if Bitcoin remains stubborn for 6 or 8 months or even a year after the halving, Riot has the staying power to hang around and see what happens. So, okay, now I want to talk about growth because this is an important piece of the puzzle as well. So you can see Q4 2023, 12.5 exahash. So right now they're at 11.7. They've been planning this 12.5 exahash for quite some time. They were supposed to be there several quarters ago. A few unexpected things happened. One of their buildings got damaged. In gold is the Rockdale facility. That's their existing facility that's basically built out. Rockdale Building G is where the damage is done, so that's what this little area is right here. Then you're going to see Corsicana. This is a 1 gigawatt facility in addition to the 700 megawatt facility that is Rockdale. So between these two facilities, they have access to the most infrastructure of any Bitcoin mining company. Now, a lot of this still needs to be built out, but you're going to see this next 4 exahash in blue is going to be in the Corsicana building, and then they have commitments in that same purchase order that they made in Q2 of 2024 to get to 20.2 exahash. So they're adding about another 8 exahash over the next couple of quarters if all goes to plan. Now, as you guys know, sometimes, particularly in the Bitcoin mining world, there are a lot of pitfalls, so we don't know if they'll stay on this schedule or not. But at some point in 2024, I think you can expect them to get to 20 exahash. They then have an option on that purchase order to actually buy another 15 plus exahash worth of Bitcoin miners. So you'll see, assuming full exercise of additional MicroBT purchase option, that would get them up to 36.3 exahash, and they're saying 2025. So this is a company that has a massive, massive growth plan ahead. So obviously only time will tell exactly how far they get. Somewhere at or around the halving, I believe they'll be at 20 exahash. It's going to take an awful lot of money to get from here to there. So like all of the Bitcoin mining companies, they are going to continue to do stock dilution. Just mining Bitcoin, the profit from mining Bitcoin is not going to provide this growth that they're talking about. With that in mind, they recently started a $750 million at the market shelf offering. So this is from their footnotes of these financial statements that they just issued, 2023 at the market offering. So it's worth noting that in 2022, they had a $500 million at the market offering. They did just finish that up. They drew down all $500 million. So they've already issued some shares here. And a lot of what they have done is to fund the purchase order that we just talked about. So they have mentioned that with what they've done, they're fully funded to get to, I believe, to get to their 20 exahash. So you can see during the 3 months ended September 30th, so included in this financial statement, they drew down $126 million on this shelf offering. They issued just over 11 million shares in Q3 of 2023. Subsequent to the end of the quarter and through November 6th, they've issued another 10 million shares for about $100 million. With that, they've used about $230 million of the $750 million. That still leaves them over $500 million left to draw down on this at the market offering. This will mainly be used as a resource for growth. Like most of the Bitcoin mining companies, Riot basically pays for their operations by selling their Bitcoin that they mine. And you'll notice, if you remembered when we looked at the October operational report, they sold almost all of the Bitcoin they mined in order to pay for operations. Okay, so that's essentially how they plan to get from 11.7 exahash up to 16 and then 20. This $750 million will not get them all the way to 36 exahash. They will have to do even more than that to get to 36 exahash. But remember, they also have almost $500 million of liquidity on their balance sheet. So if you want to do your own deeper dive, there are several more pages in their investor presentation that go through and walk through how they intend to get from here to there. Next, I want to talk about the power credits. So their power strategy is a bigger portion of the puzzle than for most of the other Bitcoin miners. They get more credits, they get more energy credits than all the other Bitcoin miners put together. Riot's energy credits are significantly more than all the other Bitcoin miners added up put together. They do not get paid for these. This is not cash compensation. This is literally just a credit against future power use. So it's only companies that use power that are eligible for these credits because they can only be redeemed by using more power. And you're going to see when we get to the income statement what impact this has. This also has an impact on the cost per coin. If you remember, they're saying their cost per coin right now, year to date, is about $5,500, but that includes these massive credits. And since these are seasonal, that number is going to change over time. So I'm going to show you some of the raw data that I pulled directly from the financial statements to show you what their actual cost per coin is, these credits notwithstanding, because the credits are a variable. We don't know what they will be over time in the future. Now to my number one reason that I have a high level of conviction in Riot. This is their balance sheet as of September 30th. This to me is the strength of this company. They still have the strongest balance sheet out of any Bitcoin mining company. The first thing that I'll show you is they have total stockholders' equity of $1.3 billion. That is more than any other Bitcoin mining company. More importantly than that, they have zero long-term debt. If we look at their current assets, I like to look at current ratios. Those of you who are familiar with the channel, you'll know this is one of the important numbers that I look at, and that is basically current assets versus current liabilities. So you're going to see Riot at September 30th has $513 million in current assets. They have $71 million in current liabilities. That's basically a 7-to-1 current ratio. That is absolutely out of this world. A 2-to-1 or 3-to-1 current ratio is outstanding. Some of the Bitcoin miners actually have a negative current ratio. They have more current liabilities than current assets. If we look at their current assets versus their total liabilities, current and long-term, it's still almost a 5-to-1 ratio. Not only do they have a lot of current assets and they are highly liquid, but also they've invested a massive amount into infrastructure so that they can continue to grow and be in control of their own fate. Now I want to look at their income statement. This is where I have a few concerns. So we're going to talk about a couple of different things. I want to talk about their actual cost per coin. I want to talk about their actual gross profit. I want to talk specifically about their data hosting, and then I want to take a closer look at their energy credits. These are the main things that are dictating this income statement. The other thing is, with the Bitcoin miners, there's a lot of big numbers on these income statements that don't really have to do with day-to-day operations. So I'm looking to see from a cash flow standpoint from operations what are these companies doing, because the sustainability of these companies depends on positive operations, right? We want to be cash flow positive. We want to be generating cash, and we want to be making profit. If you look, their total revenue, like we discussed earlier, is $51,891,000. So just under $52 million. And that is comprised of three main things. Bitcoin mining. And I will tell you, to me, that is really the important number on here. This is a Bitcoin mining company. They do have two other segments. Data center hosting, which we're going to talk about in specific. That is one of my biggest issues with this company. I've been talking about this for many quarters. We did have Jason Les was nice enough, the CEO of Riot, to come onto the channel. He did discuss this with us. Jason talked about the fact that they are looking to continue to have hosting as a part of their equation, and they want to turn this into a profit center. But since we have talked, this situation has not gotten better. It's actually gotten worse. So I do think it's worth going through the numbers and talking about. They are losing a lot of money in data center hosting. The third segment of their business is engineering. That is $15 million of revenue. You're going to see, if we look at cost of revenue, engineering is about $13 million. So it's not quite a wash. They do generate a little bit of gross profit there, but really, that's more to facilitate all of their other operations. This is not really what their business is all about, but it does help them remain vertically integrated, and it does help their overall picture. So while it's not a source of future revenue, they're not looking to grow that, it does help them run their operations. The number that they're looking to grow, period, end of paragraph, is their Bitcoin mining number. Right now, at the moment, they have a lot of legacy data center hosting agreements that they inherited when they bought the facility. Those agreements apparently are a nightmare because they continue to lose a significant amount of money each quarter. So if we look at the data center hosting for this quarter alone, the revenue was $5.1 million. The data center hosting cost of revenue was $26 million. So they lost $21 million in hosting. This is just in this one quarter. That's actually worse than it was the quarter before. So one of the things that I really would like them to quantify is they keep saying that they're addressing this issue. They are looking to get rid of these legacy contracts that they have. I know they've sued one of these companies. They talked about that in our interview. They also talk about that in the footnotes of their financial statements. So they're trying to unwind some of these bad agreements. I am hopeful that they will not replace these with new agreements for hosting. Hosting has been a nightmare at almost every single company that I look at, so this is just my own personal opinion. I would rather see them fill up their facilities with their own machines and increase this Bitcoin mining number. They may have opportunities to host other machines and turn this into a profit center. They seem to indicate that that's what they wanted to do, so only time will tell. When does this pain end? You know, $20 million a quarter is significant. I want to go to an excerpt from management's discussion in the 10Q that they just issued. So under data center hosting, they talk about this. And to me, this only further confuses me. So I really would like some clarification on this. Whatever the pain is, however much it is, as an investor, uncertainty is the worst thing. So I think they're better off just trying to quantify this and giving us some insight as to how much pain is left, and when does this end. So the costs went up significantly year over year. The 2023 cost for the quarter was $26 million. The 2022 cost was $14 million. That's an increase of approximately $12 million. I've highlighted here, the costs consisted primarily of direct power costs. So that should be a one-to-one correlation with the number of machines that they're running. So my question is, if they're unwinding these relationships, if that's true, then why does the cost, which is comprised mainly of direct power cost, why is that going up so dramatically? It's almost doubled in a time frame where the revenue is down significantly. So they then go on to say the increase was primarily attributable to the significant increase in the size of our Rockdale facility. Well, leave me a comment below if you can interpret that, because to me, that really doesn't make sense, and it's not consistent with the fact they're saying that the cost of hosting is the direct cost of power. So what's the difference what size their facility is? I don't want to belabor this, but I do think it's important. They are losing $20 million a quarter on this at the moment. I'd like to know that that number is going to reduce and ultimately disappear and maybe even turn into a profit center. In the grand scheme of things, this is not going to make or break this company either way, but I would like to know as an investor, what's the deal? Okay, the next thing I want to talk about is cost per coin, because we see in their investor presentation, remember the first thing that we looked at, cost per coin was $5,537, but we talked about how that includes the energy credits. Now, the energy credits is a very inconsistent thing. What I like to look at is to take numbers directly from the financial statements and see what their actual direct cost per coin is. Now, their direct cost per coin does get reduced with these energy credits, so we do need to bear that in mind. So this is their direct cost of Bitcoin mining. It was $24,449,000. So I've basically been tracking this over the years, and you'll see this is the last 6 quarters. Their cost per Bitcoin in this quarter was $22,106. That does not include the credits that they get. So, as I've been tracking this cost, in the past, this has fluctuated from $13,000 to $14,000 back to $13,000. In the first quarter of 2023, this was all the way down at $10,000. So remember, I talked about at the beginning of the year, this was my highest conviction play. And we looked at the fact that in January, they mined more Bitcoin than anybody. You're going to see in Q1 of 2023, their cost per coin was at a very low number. So since then, we're now 2 quarters down the road, and this is now $22,000. So I do think this is an anomaly. I think it's the very reason that they got such massive credits is the very reason they ended up paying more money for energy this quarter. But I want to keep my eye on this because both of those numbers are an anomaly. So you're going to see over here, I have energy credits. So in this quarter, there was $49.6 million in energy credits. That dwarfs anything that has ever happened for this company. I think it's more than all the energy credits that they've received all put together in all of these other quarters that we have on this list. You'll see the previous quarter was $13 million. That was their all-time high previous to this. So I don't want to ignore these energy credits because they are real. So as they use energy, they don't have to pay this $22,000. But this is their cost. So if for some reason these energy credits were to dramatically decrease, we want to know what their cost per coin is. So I also want to reiterate, I don't think it's fair to jump out and pull this number out and say their cost per coin is $22,000 because you can see this is an anomaly versus all the other quarters that they've ever had. And I do think, again, there's the same anomaly on the energy credit side. So I think that the Texas grid was struggling in this quarter. Energy costs were through the roof, and it's part of the reason that they switched from mining Bitcoin to really getting these energy credits. Because when we take these into account, you can see that for the year, this has drastically reduced their cost per coin. Okay, next I'm going to go to the chart. If we look at yesterday, you'll see we did have a rough day yesterday. We finished at $10.28. When Bitcoin was at $25,000, Riot stock was trading at $10.52. It is now trading below that. Bitcoin hit its high for the year at that time at 31,800. We've subsequently taken that out. Bitcoin has now gone past its all-time high from July, but you'll see Riot was at over $20 at that point, and it's now at $10. So I hold Riot. I'm holding them for the long term. Again, this is not financial advice. I'm not recommending that you buy Riot or sell Riot. Only you know your own investment strategies and your own time horizons. I am a buy and hold investor in general. My Riot position, I'm expecting to hold for multiple years through the next Bitcoin bull run, maybe beyond. If Riot can just get back to where it was 4 months ago, that's basically 100% increase in the price of their stock. So I don't know that that's going to happen. I suspect Bitcoin would have to go on a pretty heavy bull run, maybe get up to $40,000 or $45,000 in order for something like this to happen. So only time will tell. Again, for me, I'm getting out of the short-term guessing game with the Bitcoin miners in particular. These are buy and holds from my perspective, not financial advice. This is not all sunshine and roses for Riot. I do have some issues with them, with Riot and all the Bitcoin miners. these are leveraged plays on Bitcoin. So this is a leveraged play on a highly volatile asset. So these are high risk stocks. So please be careful while investing. I hope I've answered a lot of your questions on Riot. If you do have other questions, feel free to leave them in the comments section below. I know this video was a little bit longer than usual, so thanks for hanging in there with me. I will be doing updates on all the other Bitcoin miners that are issuing their financial statements, so a lot more videos to follow. So thanks again. If you're not yet subscribed, please remember to subscribe to the channel, smash the like button, and hit the notification bell so that you never miss a video. So thanks again, and we will see you in the next video.